Good morning, this is Bloomberg Daybreak Europe. Happy Wednesday. I'm Tom McKenzie in London. These are the stories that set your agenda. In the hands of the leaders, the US and China agree a framework deal to ease trade tensions, ready for sign-off by Presidents Trump and Xi. S&P futures trend lower as attention now turns to today's US inflation reading, forecast to tick up on early signs of tariff pass-through. Plus, squaring the circle, UK Chancellor Rachel Reeves sets out her spending plans for the next 3 years, with some departments facing real terms cuts to their budgets. So we have a framework for potentially further conversations between the US and China. Now go to the presidents. We didn't get much detail on the back of 2 days of talks between the two sides here in London, but at least on the very margins, an easing of tension between the two world's largest economies. US markets ended the session up around 0.6% by the end of the close yesterday. European markets were flat on Tuesday. Today, European futures pointing lower by around 0.4%. FTSE 100 futures also pointing lower by 0.3%. We're looking as well for the capital expenditures plan and the detail coming through from the Chancellor Rachel Reeves later today with that spending review. S&P E-minis, as I mentioned, down 0.4%. NASDAQ 100 futures after a day of gains of around 0.6% by the close yesterday, in the green today, pointed lower by 0.4%. Let's flip the board and have a look cross-asset as we look ahead to the inflation data out of the US. For the month of May, year-on-year expected to tick up. Core inflation at around 2.9%. That is the estimate. What does that do to expectations? That data print later today in terms of the Fed's next steps, 42 basis points priced in by the markets by the end of this year. 4.47 on the benchmark, 10-year largely unchanged. Euro-dollar at 1.14, a little softer by 0.1% for the single currency. Brent crude closing in on $67 a barrel, but just down 0.1% in the session today. And gold getting a bit of a lift despite the easing of those trade tensions. The yellow metal bid up 0.5%. Let's check in on the Asian markets as well. There was some relief there on the back of these trade talks. Not huge moves as we're seeing across the benchmark. You're seeing gains of 0.3%. A slightly brighter picture over in Hong Kong with the HSI up a full 1% right now. Over in Japan, the Nikkei also gaining 5 cents and the Japanese yen at 145. So the US and China have agreed to that prelim plan to ease those trade tensions, which now goes for approval, as I mentioned, to the nation's leaders. American negotiators say they expect issues concerning rare earths and magnets will be resolved.
We do absolutely expect that the topic of rare earth minerals and magnets with respect to the United States of America will be resolved in this framework implementation. That is a fundamental part of that. Also, there were a number of measures the United States of America put on when those rare earths were not coming. You should expect those to come off sort of, as President Trump said, in a balanced way.
In the past 2 days, China and the US teams had in-depth exchanges. Our communication is very professional, rational, in-depth and candid. Both sides have agreed in principle to a framework for implementing the phone call between the two leaders on June 5th and the consensus they reached in Geneva.
For more on this, let's bring in Bloomberg's Lizzie Burden, who was outside Lancaster House for much of the day yesterday. Lizzie, what do we know about the details, if any, on the back of these discussions?
Well, Tom, they were thrashed out over many, many hours yesterday. The talks went all through the day and into the night as well. The US Treasury Secretary Scott Bessent having to leave early because he had to get back to Washington to testify in Congress. But they got back round the table. Howard Lutnick, the Commerce Secretary, and the US Trade Representative Jamieson Greer emerging finally, as you heard there, to announce that they had reached a plan, a preliminary plan that, as you say, now needs to be taken back to the country's respective leaders, President Xi and President Trump. So what's in that plan? Well, as you heard there, essentially China is going to send more rare earths to the US, and in exchange the US is going to roll back some of the export controls that it had introduced in retaliation since the Geneva Agreement. And they're presenting this as a framework for implementing that Geneva Agreement. It's not a framework that we can see, but the idea is to try and rebuild trust. That has been the whole point of these talks in London, that trust having been eroded concluded since Geneva. But the question is, what if this relationship breaks down again? And crucially, they haven't got more meetings in the diary yet, according to Greer. So it very much looks like we're not out of the woods yet, Tom.
Can we claim a victor in these conversations? Which side came out better than the other, or was it pretty equally matched?
Well, the markets, at least, seem to think that maybe it's China that is the victor here. You talked through what's happening in the markets. The immediate reaction was the yuan inching higher and US equity futures pointing lower. But I think if we look back through these meetings in London and indeed through the past few weeks since the Geneva Agreement, a crucial conclusion is just how important export controls are in modern trade warfare. Yes, tariffs are Donald Trump's favourite word, and indeed the court ruling in the US is that he can proceed on that front. But Beijing has well demonstrated how an economy can use export controls to gain leverage over its rivals. Now, the US is seeking all sorts of trade deals with other countries at the moment: India, Japan, South Korea, and a range of others. But President Xi Jinping's also been on the phone. He was speaking to the newly elected president of South Korea as well. So this is not over yet. In terms of the US-China relationship, now we look for a grand deal to come. But as we know from phase one in the Trump administration's first term, these things can take a very long time to hash out. That was 18 months in the making. So we're in it for the long haul now, Tom.
Yeah, and even that deal did not end up being fully implemented. Lizzie Burden, thank you very much indeed with the latest on those US-China trade talks. US futures, meanwhile, struggling for direction on the back of that conclusion, of course, of those 2 days of talks here in London. Let's bring in Bloomberg's Valerie Teitel now for the market reaction and a preview as well of the inflation data out of the US, which ties to that tariff story, Val.
Oh, yes, it does. But interesting to see the market reaction. A lot of boost given to those Asian shares. This is the 8 shares trading in Hong Kong, up more than 1% on the back of this news that the U.S. and China have reached a preliminary agreement. S&P futures are underperforming this morning, down 0.3%. You can maybe attribute some of that weakness to this U.S. appeals court failing to issue an injunction on Trump tariffs. Instead, we'll be hearing the case in an expedited manner. But the next catalyst ahead for U.S. stocks is definitely going to be this CPI print landing on our desks at 1:30 p.m. London time. The estimate for core CPI month on month is that it will tick up to 0.3%. But the question here is, Tom, just how much can be attributed to Trump's tariffs? I was reading a note from Omar Sharif at Inflation Insights. He says that less than a fifth of this core month on month reading can be attributed to tariffs. But no doubt economists will be trying to strip out tariff-induced inflation from this print. Most economists, though, don't see this tariff-induced inflation hitting until later of the summer. Some seeing not until July. I think this comes with an interesting backdrop that economists on U.S. inflation, their estimates have been dropping recently. Take a look at this chart. This is the consensus estimate for year-end CPI. You can see this line in blue peaked at 3.2% and has steadily come down to around 3%. So economists are seemingly less anxious about inflation, but let's see if that narrative continues today with the CPI print on deck.
Yeah, indeed. And someone, of course, who's been steering the ship on the tariff story has been the US Treasury Secretary Scott Bessent. And now some rumours, some speculation, some reporting that possibly he could end up being the pick for the Fed chair come next year from President Trump. How would the markets absorb that, Val?
Well, Scott Bessent is seen as a safe pair of hands. It's really still a question mark of maybe the market reaction if he is picked. But Trump does say that he wants to name a successor very soon. Formal interviews have yet to take place, and Jerome Powell's term isn't yet over until May 2026. But the speculation here is, Tom, that if Trump does want to have some sort of influence on Fed policy, he would name a shadow Fed chair sooner rather than later. So the markets will watch what the shadow Fed chair says rather than Jerome Powell. There are still a few other names in the mix, Scott Bessent being the most recent one. Kevin Warsh was talked about earlier, and Kevin Hassett. So these are the 3 names in the mix, with President Trump saying he aims to pick a successor for Powell very soon.
OK, that speculation is heating it up, isn't it, around the next Fed chair, given that term ends early next year, early 2026, of course, for the current chair of the Federal Reserve. Bloomberg, Valerie Titel, thank you very much indeed. Here's what else to think about today. 12:30 p.m, of course, it's the big one for the UK, the spending review. Chancellor Rachel Reeves in the hot seat. What a crucial day for the UK Chancellor. We will be across that story for you, of course, with all the details and context. And at 1 p.m. UK time, we switch our focus to Poland and the confidence vote, of course, for the President Tusk, Prime Minister Tusk, I should say, given, of course, the political splits in that country following that recent presidential election. So we look to that story as well. And at 1:30 p.m. UK time, we do get that data then on inflation, the US CPI, Consumer Price Index, dropping, and, of course, consequential for thinking about the tariff impact and the Federal Reserve's response to that. Coming up, the UK Chancellor setting out her spending plans then for the next 3 years. We're going to have the details on what to expect. We'll give you a comprehensive preview on what to watch for a big day for the Chancellor. Plus, where next for US trade policy? We're going to discuss that with Aberdeen's Sree Kochugovindan. That is coming up in terms of the context and a gauge in terms of this global economy. Stay with us. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. US equity futures slightly lower this morning as investors search for details from the US-China trade talks. Good luck with that. There weren't many details. Joining me now to talk markets and the reaction to all things tariffs, trades, and we'll look ahead into inflation as well, is Sree Kochugovindan, Senior Research Economist at Aberdeen. Sree, thanks so much for coming bright and early this morning. Let's start with the US-China trade talks, then 2 days of talks. We are looking for those. There aren't many details, quite frankly. We have a framework. They're going back to the Geneva consensus. It needs to be signed off by the presidents. The market reaction, what is your takeaway in terms of where this leaves us in this crucial trading relationship between the two nations?
I think this is very classic in terms of trade negotiations are very difficult and long-winded processes. And I think particularly with China, it's going to be quite a battle going forward. So, yes, it's great that we have this framework in place. And I think it's a great sort of truce or détente for now. But we don't have, as you say, we don't have very many details. It's good that we're going back to the Geneva level, at least. So some of that escalation that we saw has retraced. So that's a good piece of news. But we still need to know exactly what the parameters are in order for firms to actually make business decisions, hiring decisions, and actually know what the parameters of supply chains are. We don't have enough detail yet. So I think that will take many weeks yet. And I know we have an August deadline. We're back to that August deadline now, but it takes a lot longer than that. So I think for now it's good news in that there's a reprieve, but there's still a lot of challenges ahead.
Yeah, and I think the point that you focus in on, which is the capital expenditure coming through, or at least on hold from corporates and businesses waiting for that clarity, is so important when we think about the tariff and trade conversations. In terms of other negotiations, there seems to be granular progress in some areas. As we count down to that 90-day deadline, so July the 9th for most nations, as you say, China is in August. What are you watching for on the trade front in terms of other negotiations, given that we know that those corporates are on hold?
Yes, I think an interesting example would be Japan, actually. That it can be considered one of the... So you had the quick win of the UK, and you had a couple of countries like India, Japan, South Korea as well, that were sort of in the middle, making good progress. And I think it's interesting that they have taken a bit of a harder stance over recent weeks. And that really follows through with China's hard stance back in May. And it was quite interesting to see that shift in dynamic. So just very quickly going back to China in terms of the power that they have, the leverage they have in terms of critical minerals, that has spillovers to these other nations as well. Japan had to walk a very fine line between China and US because of those critical minerals and the pressure they were getting from the US in what they could trade with China, and then China pushing back as well in terms of, well, can we actually supply you with the critical minerals that you need as well. So that tension there spills over to other countries like Japan. Now, I think it's interesting that the chief trade negotiator is now involved in that Japan-US negotiations, and he's been flying to Washington every week for the last 3 weeks. So that's a good sign. Previously, they were just sending juniors in. I think who attends is very important. Are they dealing with Bessent and Lutnick? Are they dealing with the chief trade negotiator? All of that is quite key.
OK, so we're watching the names in the room.
Yeah.
What is your current assessment of recession risks for the US?
Yes, I think the probability there has gone down quite significantly. However, it's still around 30%. We still think there is a risk, and you need to look at the different waymarks. And part of that really is what happens with the labour market. And it's still relatively healthy. Payrolls there. If you look at the details, there are signs of slowing. And if you look at unemployment claims, jobless claims, that was starting to pick up. Very early tentative signs of loss of momentum. Nothing really material yet for the Fed to sort of really act at this juncture, whether it's details from the labour market or details from inflation.
And you think the Fed stays on the sidelines until towards the end of this year? So you're expecting just one cut. Markets pricing close to 2, about 42 basis points.
Yes.
But in fact, markets have been coming closer to your forecasts.
Exactly. So we have just one more cut at the end of the year. And the reason for that is that the Fed don't have enough data yet to act. They have this dual mandate. Inflation has been easing, and we expect, headline with energy prices coming down, headline should continue to ease. But we're starting to see already, and I think this afternoon we'll see again, that there is the first signs of tariffs biting into core goods prices picking up slightly. So we're not expecting any major changes today, but the details will be quite important. Core goods go up and services are coming down a little bit. There'll be an offset. But the Fed really want to see what is the impact of tariffs longer term.
And if tariffs are increased on Europe after that deadline, that 90-day deadline by the US to 50%, does that derail some of the green shoots we've seen in the European economy?
It is definitely a risk in the near term. So we're expecting another cut from the ECB as well. We are expecting some weaker growth this year. Partly because of the tariff drag, actually. So yes, indeed, it will have an impact on exporters in the near term. So on both sides of the Atlantic, it's going to have an impact for sure. But I mean, there are some offsetting policies, but they take time to filter through. So yes, we have some fiscal easing, and that's something that the ECB will need to consider. But these things do take a long time.
Maybe more of a 2026 story in terms of fiscal easing coming through, primarily, of course, from Germany with the spend on infrastructure and defence. Sree, thank you very much indeed with the analysis and the economic outlooks for the US, Europe, and those trade negotiations, not just between the US and China, but also between the US and Japan and Europe as well, and the potential implications for this global economy. Sree Kochugovindan, Senior Research Economist at Aberdeen. Thank you. Now, the UK Chancellor is set to outline how £600 billion of annual spending will be allocated across departments over the next 3 years. Rachel Reeves is under mounting pressure to relax her fiscal rules in order to support under-resourced public services and accommodate higher than expected public sector pay settlements. For more, I'm joined by Bloomberg's James Woolcock, who always has a very close eye on UK politics. James, what can we expect then from this spending review for the Chancellor? It's a crucial day for her and her team. What are you going to be scrutinising?
I mean, the reason it's crucial is this is a fifth of the UK economy in size, 600 billion a year. We know that 200 billion is going to be the NHS, 39 billion defence, 94 in education. What is happening to the rest? And also, what is happening to the 134 billion that they've put aside for capital investment? Of that, we're expecting to see some go to housing, roughly 40 billion, some go to rail investment. They've announced that 15 billion. This is the moment that Rachel Reeves says, I was elected as a Labour Chancellor to do X. And we find out what X is today.
And they're going to lean in. The expectations are they will lean into that $134 billion capital expenditures plan. That's the kind of headline they want to be pushing. What is this going to mean for the Chancellor, who's seen the ratings in terms of the polls, not just for her, but the Prime Minister as well, plummet on some of these decisions? Is this kind of a make or break moment for the Chancellor? How decisive is this moment going to be for the head of the UK Treasury?
The way I'd explain it is today we are casting a political die as the government. Not the polls, not the politics, but the economics, the cold, hard cash. The shape of the next election will be decided today. The last spending review was done in COVID by Rishi Sunak. The one before that was 2015, pre-Brexit. That's the kind of size of the event we are talking about today. And like you say, this could be the comeback moment for the Chancellor, where growth comes from this, investment comes from this, the private sector is rejuvenated from this. It could also be the moment we find some quite difficult cuts, and we find out about very tough decisions the UK government will have to take in the years going forward.
OK, Bloomberg's James Walcott, thank you very much indeed. A fantastic setup of what to think about as we lead up, of course, to this moment for the UK Chancellor. A crucial moment, of course, in terms of the spending review and decisions around different departments and capital expenditures as well. £134 billion approximately planned in terms of allocations around that. James, thank you. Coming up, a curfew is imposed in parts of downtown Los Angeles. A curfew as the governor of California accuses President Trump of misuse of power. The details are next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. 700 Marines deployed by President Trump have arrived in Los Angeles as protests over immigration raids stretched into a fifth night. The city imposed a nighttime curfew with more than 380 people arrested since the weekend. California Governor Gavin Newsom accused Trump of misusing his power and warned the rest of the country to prepare for similar unrest.
California may be first, but it clearly will not end here. Other states are next. Democracy is next. Democracy is under assault before our eyes. This moment we have feared has arrived.
Well, President Trump, meanwhile, says troops would remain in LA until, quote, there's no danger, and the city would be burning had he not sent troops.
If we didn't get involved, right now, Los Angeles would be burning, just like it was burning a number of months ago with all the houses that were lost. Los Angeles right now would be on fire, and we have it in great shape. We're not playing around.
A US federal appeals court says President Trump can continue to enforce his global tariffs for now, in a win for the president on one of his signature economic policies. The Justice Department had argued that US officials' concerns about ongoing trade negotiations outweighed the economic harm claimed by the small businesses that sued. The court has scheduled arguments for July 31st. And the Trump administration is to propose scrapping Biden-era climate mandates requiring power plants to curb greenhouse gas emissions. Sources say the Environmental Protection Agency is also planning to unwind limits on mercury and other toxic air pollution from the facilities. We're told the aim is to prioritise domestic energy development amid a surge in power demand from AI. And the US has sharply criticised 5 allies after they imposed sanctions on 2 far-right Israeli government ministers for inciting violence against Palestinians. The penalties on the ministers were imposed by the UK, Australia, Canada, New Zealand and Norway. They said both men had, quote, incited extremist violence and serious abuses of Palestinian human rights. US Secretary of State Marco Rubio urged the reversal of the sanctions, saying it stands shoulder to shoulder with Israel. Meanwhile, the US ambassador to Israel has told Bloomberg that Washington no longer endorses an independent Palestinian state. Mike Huckabee also suggested a piece of land could be carved out of a Muslim country rather than asking Israel to make room.
If someone wants to declare that this is the exact strip of geography that is going to be the future Palestinian state, that's where the complication comes from.
Well, maybe the word is exact. That's the problem. Are you suggesting that somewhere other than mandatory Palestine area, that it could be in Saudi Arabia or something? Or are you suggesting?
I'm just saying that I think every option should be and could be on the table.
Coming up, Liquidity was name-checked by the UK Prime Minister this week. We're going to speak to the company's CEO. This is Bloomberg. morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. In the hands of the leaders, the US and China agree a framework deal to ease trade tensions, ready for sign-off by Presidents Trump and Xi. S&P futures, though, trend lower as attention now turns to today's US inflation reading, forecast to tick up on early signs of tariff pass-through. Plus, squaring the circle, UK Chancellor Rachel Reeves picks the winners and losers as she allocates more than £600 billion in annual departmental spending over the next 3 years. Let's check in on the markets then. US markets ending up in positive territory by the end of the close on Tuesday with gains of between 0.5% and 0.6%. But that modest optimism is being unpicked right now. Markets on hold, it seems, the inflation data coming out. Yes, you had some kind of reprieve in terms of the easing of tensions between the US and China, but very few details on next steps. European futures pointing lower by 0.2% after ending the day yesterday essentially flat. Here in the UK, of course, we announced or look forward to the announcement from the Chancellor Rachel Reeves around those spending plans. FTSE 100 futures pointing down by 0.2%. S&P E-minis then off by 0.3 after the modest gains of yesterday. Nasdaq 100 futures currently looking to drop 79 points. Let's flip the board and have a look cross asset. Treasuries in focus in the lead up to an inflation print which on the core level is expected to tick up to 2.9%. We'll see how that story impacts, of course, expectations and trader bets on the Federal Reserve, with markets pricing in about 42 basis points of cuts by the end of this year. The 10-year at 4.47, Treasuries relatively unmoved so far in the session. Euro at 1.14, just a little softer by 0.1%, and Brent is largely unchanged, close to $67 a barrel on oil. Gold getting a bid in the session, up 0.6% on the yellow metal. We have some breaking lines coming through from the retailer. The parent company of Zara, Inditex, first quarter earnings coming in at €1.64 billion, just below the estimates of €1.65 billion. That stock is essentially flat year to date. The story around tariffs, of course, and FX and currency impacts will be in focus. In terms of sales, coming in slightly softer than the estimates. €8.27 billion for sales in the first quarter, estimates for 8.38. So a little softer on sales. We'll unpack that story on more detail for you. That is a stock to watch for us in terms of corporate stories this Wednesday. Now, UK Prime Minister Keir Starmer name-checked to the company Liquidity during his speech at London Tech Week on Monday as the AI-driven lender announced it would base its European headquarters in the British capital. It says it plans to spend £1.5 billion in the UK market over the next 5 years.
I am really pleased to welcome what I see as yet another vote of confidence in Britain today, with the announcement that Liquidity will base their European headquarters right here in London.
OK, so that was the Prime Minister name-checking Liquidity on Monday. Now we're joined by the co-founder and CEO of the company, Ron Daniel. Ron, thanks for coming into the studio. Why pick London over, say, Paris or Berlin?
Good question. So we love London. We believe London has a huge pool of talent and a unique market access. What it's lacking today is growth capital. Like when we look at the market, we put UK against the US, for example. In the US, we have every growth company has $4 available for growth, relatively to $1 in the UK. So mind the gap. We are in England, right? This gap is where we're stepping in.
OK, you know, that's a huge gap. $4 to 1 is the comparison in terms of credit and liquidity available, US versus the UK. You use an AI system to help allocate and make decisions around credit and equity investments. You're backed by the likes of Japan's MUFG, by Apollo, by KeyBank as well. So some really significant backers behind you. In terms of how much you plan to allocate in terms of the investment appeal of the UK, how much money are you looking to put to work, whether it's credit or equity, in the years ahead here?
So Liquidity is both credit provider and equity provider, but 90% of our business is credit. We already provided about $300 million in the UK. Great companies like SumUp, Hungry Panda, Butternut Box, and others. And we intend to provide another $1.5 billion in the next couple of years. It all depends on the opportunity in the market. We believe since the equity market is a little bit on the shy side right now, there's going to be a lot of credit opportunities. A lot of people tend to take credit when the equity market is on hold. So it's good timing.
So this is good timing. I was speaking to the CEO of Octopus Ventures, a VC firm based here in the UK, and she was talking about stagnant exits, the stagnant exit environment causing that liquidity squeeze. So that provides an option, at least an opportunity for your liquidity to step in. So that is a positive, is it, for your business model, the fact that exits are stagnant and founders and investors are looking for that additional liquidity?
So in reality, it's always the case. Always the market is tilting between equity and credit. It's just a little tilt here or there. It mainly depends on macro event. Now the market situation is that no one wants to price anything because the market is too crazy. You know, some people get crazy decisions. Things are changing on a daily basis, so people want to wait and see the macro environment settle down. Once it settles down, it will tilt again to equity. This is how the world works. It's very simple.
And in terms of the time frame as well, between founding a business, a startup within the tech ecosystem and exiting, we know that's been elongated, that's been stretched from maybe 7 to 8 years to potentially around 15 years. What does that mean for your business?
For us, it's good because people tend to grow from with credit instead of with equity because they don't want to get diluted too much along the way. However, for the VC industry in general, it's not such a good trend because most of the venture capitals, they have an horizon of up to 10 years. That means they have to liquidate. If they don't liquidate, they cannot recycle the capital in the market. And then new startups find it hard to raise capital and basically stagnate the entire ecosystem over time. So over time, it has to balance itself. The public market have to open again for new IPOs and to enable a fund to liquidate. But on the short run, it's very good for the credit players.
OK, so it's the short-term and the longer-term view in that respect. How competitive is the private credit market now in the European ecosystem?
Private credit is always competitive, but there are different niches. I think most private credit providers, they're very good with hard asset lending. It's very easy to lend when there's like a building to lend across, to lend against it, to securitize the loan. But when the asset is a tech company, no one knows the value. It's a very moving target, right? This is where the competition gets more tricky because it's not a price competition, it's a risk-reward understanding competition. In this segment, still the ocean is quite blue.
NVIDIA CEO Jensen Huang at the same event, of course, with the Prime Minister saying that the UK does need one thing to move things forward on AI, which is infrastructure. We didn't get any major announcements around infrastructure spend. The Prime Minister said an extra £1 billion or so, but we've seen $100 billion deals in the UAE and the US. To what extent are you going to play in infrastructure, whether in the UK or Europe?
So we are vertical agnostic. We're going to play in infrastructure if the right opportunity shows up. But we are not targeting this segment specifically because as credit provider, we are tactic players for this company. We are not doing any strategic investment into this segment.
OK. Are there segments that stand out to you where you're seeing the greatest demand in terms of deal volume? What are your expectations in terms of deal volume across different sectors, say, in the next 6 to 12 months?
So especially in the UK, we see a lot of e-commerce activity. On one hand, there's a lot of talent in the market. And there's a lot of, and the position of the UK between Europe and North America is quite unique when it comes to market access. So we see a lot of activity around e-commerce and providing services into both sides of the ocean. So we focus there, mainly e-commerce.
OK. Ron Daniel, thank you very much indeed. CEO of Liquidity, on that decision, of course, to headquarter in Europe, in London, and the deal volume expectations within private credits with, of course, a credit system fuelled as well by AI in terms of the decision-making for that business, with investments in companies like eToro, Helios and Prism, and backed by the likes of Japan's MUFG. Let's get you back to some numbers crossing from Inditex and more details. We've had the lines crossing in terms of the first quarter earnings essentially meeting the estimates. Charlie Wells has been going through the numbers for us, the parent company, of course, of Zara. Charlie, what numbers are you focused on? What stands out to you from the print that we've got from Inditex?
Tom, I think, as these drop, these are really just going to add nuance to this story that we've been hearing about Inditex. And we care about this company because it is the world's largest listed clothing retailer. And I think one of the issues here, of course, is trade, how a lot of these fast fashion companies are responding to these trade tensions. Now, as these numbers numbers continue to come out and we look for commentary from management, it'll be really interesting to see because Inditex actually is less exposed to China than a lot of its fast fashion competitors. So that could really kind of provide an interesting tell there. The other thing that we're really looking for is how a lot of these sales figures turn out, because over the past few quarters, we've actually been seeing something of a slowdown in revenue growth. So that could give us an indication of how that kind of fast fashion consumer, that more price-sensitive consumer, is panning out. And these revenue numbers are really important because over the past few months, Inditex has been talking about an increase in CapEx. And so they've been really kind of looking to kind of bolster their logistics, bolster a lot of their supply chain. And so these retail revenue figures are even more important given that CapEx spend.
How do these numbers for Inditex compare with the broader retail sector, Charlie?
I think there's sort of two issues here. And I think one that we're really going to be paying attention to is the issue of currency, because Inditex in some ways is benefited because it has this integrated supply chain. It's very kind of, concentrated in Europe and countries closer to Europe. But given the strength of the euro that we've been seeing over the past few months, that could provide something of a headwind given that, dollar softness that we've been seeing. So a lot of their expenses are in euros, their earnings in dollars. So that could provide something of a complicating factor for them. But there's been this interesting trend in retail, and I think as we parse through these numbers, we're going to see if this story builds out, which has been a difficult time for a lot of these higher end retailers, for these high fashion companies like LVMH, like Kering, a little bit of a midway path for the likes of Inditex, for the likes of, say, H&M, and then this really strong narrative on this kind of mid-tier luxury, the sort of Tapestry, that's the parent company of Coach, of Kate Spade, of Ralph Lauren, where we've got this kind of more value sensitive consumer. We've got these kind of higher end consumers trading down to the likes of those companies within that Tapestry fold. So I think as we go through these earnings today, that we could see if that story continues to pan out.
Charlie Wells, I have you down more of an Hermes man than a Zara man, but we can make that judgment later. Talk us about how well positioned. There's so much uncertainty. We've been talking about the tariff story, the trade story, of course, then the FX impact, and they've been hit, of course, Inditex by this, and the analysts were flagging that. How well positioned or not is the business to project out in the months and quarters ahead?
Well, I think something that we really want to look at today is how they talk about their U.S. expansion. So this has been something that a lot of retailers have been focused on. Inditex has really been trying to push Zara into the U.S. heartland, and I think that will be an interesting, story to see what updates they give us on that front, because the U.S. is now Inditex's second most important market, but they're really kind of operating only from about 100 stores in the United States, and they have plans to expand there. I think given a lot of the uncertainty, given a lot of the headwinds that we're seeing come out of the U.S., it'll be really important to see what commentary they provide on that growth story.
Charlie Wells, thank you very much indeed, breaking down the Inditex story, and we will watch that stock, of course, at 8 a.m. UK time. Now, some of the stories making the news. This Wednesday, Nintendo has set a sales record with the debut of its new Switch 2, selling 3.5 million units of the console in just 4 days. Also, almost a million units a day then. The Kyoto-based company released the figures today. They bode well, of course, for Nintendo's target of selling 15 million units by March of next year. Well on their way to meeting that target. And Bloomberg has learned that Publicis has snagged a $1.7 billion ad portfolio for Mars, owner of M&M's and Snickers, from WPP. Our sources say the French company will handle media, production and paid social media and influencer ads for the US-based consumer goods group. Mars says Interpublic's Weber Shandwick will oversee public relations. Coming up, I'm going to be joined by the CEO of Proxima Fusion. Just raised 130 million euros in its latest funding round to help build its first pioneering nuclear fusion power plant. That conversation coming up. The future of energy and Europe's role. This is Bloomberg.
Tech is integrated into every aspect of our lives, from finance to defense, AI to entertainment, and from the road to the stars. Bloomberg brings you the latest stories from the people and companies pushing the tech sector to new frontiers and the politics that shape global tech markets. I'm Tom McKenzie in London. Watch the new Bloomberg Tech Europe. Premieres June 13th, only on Bloomberg Television.
Welcome back to Bloomberg Daybreak Europe. Now, as AI data centres ramp up global energy consumption, nuclear fusion power plants could help fuel its electricity demands. The German startup Proxima Fusion is a pioneer in the field. It's just raised 130 million euros in its latest funding round, which was co-led by Cherry Ventures and Balderton Capital. Its aim is to build the world's first commercial nuclear fusion power plant with a demonstration model scheduled to begin operations in 2031. Very pleased to say, joining me now is Proxima Fusion's CEO, Francesco Sciortino. Francesco, thanks so much for coming in bright and early. Congratulations on the raise. So you've raised about $200 million in just a little over two-year time frame. And you're focused on an incredibly complex piece of engineering around nuclear fusion, but one that could have massive consequences in terms of the energy for Europe and globally as well. So focused on a stellarator-based fusion model. What does this raise do in terms of your ambitions for getting there?
First, it signals that we are ready to move very fast as a European company. We spun out 3 years ago from the Max Planck Society, a national lab in Germany. And we took this concept of a stellarator from being a purely scientific effort to an engineering endeavor, and now we're moving more and more into manufacturing. And we're looking at the path to an energy-focused program as opposed to just a research program. And this puts us on the map on the international competition.
And what are the stages to get there? I mean, some of this in terms of needing to heat plasma up to 100 million degrees, so hotter than the core of the sun, right, in terms of the heat that's needed, and then the magnets, these specialist magnets needed to contain that plasma, and that is central, of course, to these nuclear fusion power plants that you're looking to build. What are the timeframes in terms of the engineering metrics that you need to meet to get to that end goal?
Yeah, a lot has to do with the magnet technology that we're talking about. In the last few years, a kind of superconducting magnet has become available as a basic technology, and now Proxima is fundamentally an engineering company that tries to build the most advanced magnet on the planet. And this fundraising is actually financing that demonstration at scale of a stellarator high-temperature superconducting magnet. Once we knock that out in 2027, that will basically leave the path open to actually go and build a net energy demonstrator, a stellarator full-scale, an integrated system that we can then say confidently, based on now we're ready to actually build the fusion power plants.
How much of this is an endorsement, the funding that you've raised, an endorsement for European energy engineering and European leadership when it comes to nuclear fusion?
I think it's a big one. I think you look at stellarators as a whole is a topic where Germany has done so much. Yeah? The Max Planck Society that we spun out from hosts the most advanced stellarator on the planet. That's called W7X. And with this fundraising, I think this is a recognition of that advantage that we have as a European community, let's say, but also recognizes the momentum, the need for energy, the fact that it better be clean, and generally fusion can really fill that gap, as you said, in data centers, consumption, but generally much bigger demands for clean energy than we planned for.
And you're in conversation with European governments about finding a site for a demonstration plant. How are those conversations going? Are you any closer to making a decision?
It's very active work right now. So we've been talking to several governments throughout the European continent. The German government has made a very clear statement about wanting the first fusion power plant to be in the country. The government led by Friedrich Merz is quite bold on this. So, of course, we're engaging with the German government and others. And we're hoping to really get this, with this fundraise, a lot of momentum. That decision on where we build the alpha demonstrator, as we call it, needs to happen over the next months.
You've had conversations with the new Chancellor of Germany, Friedrich Merz.
With the government and several state governments and then other governments in Europe.
Talk to us about the competition in this space. As I mentioned, $200 million raised in a little over 2 years, which is no mean feat, a really big achievement. But then you compare the cash and the funding, of course, for some of your competitors in the US, and my goodness, Helion Energy in the US has raised about 4 times that. Commonwealth Fusion has raised more than $1 billion US. How do you compete with your US counterparts on the funding and the build-out of this technology?
Yeah, I think it's fair to say Proxima is, we just got started. Let's say. We started 2 years ago. This has been a fast journey. We have a long way to go. Our US colleagues, they have been attempting different concepts for quite some time. They've raised more. That's great. We need more shots on target for fusion. It's such a human endeavor to get fusion to connect to the grid that I think we should all welcome the diversity of attempts. For Proxima to really get to the energy market, this is a billion-scale project, hence why we need the public and the private to work together. both on the development side, so for us, working with the Max Planck Society, the Poised Institute in Switzerland, the UK Atomic Energy Authority, this is crucial, but of course there needs to be also the public financing side coming together.
What are you modelling in terms of potential market size of this technology? What potentially it could mean in terms of the value of this market?
Yeah, the energy markets are among the largest market that you can target. I think fusion, we shouldn't imagine it to take 100% of the grid. There is no need for that. What we should think about is the need for clean baseload, so for a stabilizing source of clean energy. And so depending on which model you rely on, let's say you get to a 20-30% of the world's grid in 2050, say, being possibly sourced by fusion.
And along the way, you meet these milestones and you unlock intellectual property value as well for you and your investors as you head towards that end goal.
Correct. It's a journey, and venture capital is the right financing asset class, let's say, to finance the creation of that IP, the creation of technology across many domains. This is a platform technology, let's say, and investors can access that value creation in the 2020s, early 2030s, and then we need to get to a fusion power plant in the second half of the 2030s.
Okay, Francesco, thank you so much. Congratulations on the raise and the progress, of course. Francesco Sciortino, CEO of Proxima Fusion. And Balderton Capital, one of the backers, of course, of Proxima Fusion. I'm going to be speaking exclusively to the company's managing partner tomorrow at 10:10 London time. So stay tuned for that conversation with Bernard Léotaud of Balderton Capital. There's plenty more coming up. Stay with us. This is Bloomberg.
We view the tariff situation generally as something that will be resolved over the next 6 to 9 months. And there are negotiations going on with lots of different countries. They'll happen at their own pace. It doesn't have a huge impact on inflation in terms of global growth. There may be a few tenths of a percent of change, but overall, it's something the world can absorb.
OK, Blackstone CEO Steve Schwarzman, of course, speaking to us exclusively, which ties us, of course, to the US-China talks. They wrapped up late, of course, at the end of the day yesterday into the early hours of this morning. 2 days of talks between the two sides. The trade dynamics have already shifted, of course, on the back of the tariffs that have been imposed on both sides, of course, most punitively on the Chinese side. And in terms of China's exports to the US, you can see the move lower. That's the white line there. That's the inflation risk for the US. Talking of which, CPI dropping later today. On a core level, inflation expected to tick up for the month of May to 2.9%. Part of that will be the tariff impact. That is the data story of the day. The opening trade is up next. This is Bloomberg.